Welcome back. Before the break, we spoke about how autos has come out of a long, degrowth cycle. Ridham of Morgan Stanley is with us, sitting here. Ridham, what do you feel? You think that this is the time to buy?
Yeah, I agree, actually. I think we've been in a 10-year down cycle, actually, not just 5. And there's a huge amount of pent-up demand. And discretionary incomes are rising. India has crossed that threshold of $2,000 per capita income. At that point, a lot of these things actually will, see exponential growth. So it's a comment I'd make about discretionary consumption in general and autos in specific. Only thing you have to be careful about the electric vehicle disruption. So in the auto parts industry, you can buy a lot of companies that will not be touched like tires by electric vehicle disruption, because you need tires whether it's electric or non-electric.
What else, Ridham, is top of mind?
Real estate. I think real estate looks good. Again, very similar theme to autos. Of course, stocks have done very well. So you buy your stocks when the valuations, are in your favor.
You think there's a longer runway for which will last the cycle?
I think residential demand is just about starting and is probably entering into a long-term upcycle. So we should see a fairly good, and this is a little different from the 03-07 cycle where developers focused on buying land at cheap prices and then making money out of it. Now it's a more conventional real estate sector which is driven by turnover, so volume. Sure. So I think we've matured as a real estate industry, and this looks quite interesting.
Ridham, defense is emerging as a big sector, right? Yeah. We had Ramesh Damani last year. He was making this point that this could be a massive sector. Initially, of course, just 1 or 2 stocks, but now this list is expanding, and some serious investments coming in this space. Are you bullish here?
Yeah, see, Anuj, you can trade there. I'm not so sure about the secular story in terms of stock market, because usually it's a difficult business. Revenues are lumpy, working capital cycles are long, return on capital gets challenged, you're dependent on the government for your order book.
And a lot of balance sheets are stretched also.
So it's there is a flavor right now which will probably go on for a while, and of course there is a story out there, but making money in the stock market is a little different. So I wouldn't puncture the story right now. I think there's some legs left, but longer term I like to focus on businesses that generate return on capital, have tight balance sheets, don't have long working capital cycles, don't have lumpy revenues. These are easier businesses to own and sleep on.
Ridham, lastly, before we let you go, what about the mid-cap and small-cap? Because in your reports also you keep advocating that there is still a lot of room for mid-caps and small-caps to do well. And there is a larger audience in CNBC who tracks mid-caps and small-caps.
So Nimish, when the profit cycle is on its ascent, it will favor mid-caps and small-caps. Those companies will obviously, now see the share of profits were at the share of large company profits were elevated 2 years ago. Now that has corrected a fair bit. But I think mid-caps and small-caps will still grow faster.
Is that what we saw in 2003, 2008? The mid-cap, small-cap party had a huge outperformance over
absolutely. We saw that, and it is but natural, right? It's much easier to grow if you're a small company than if you're a large company. Also, the other thing is that in the last 10 years, when India was in a growth slowdown, large companies gained a lot of share because they didn't have balance sheet stress. A lot of small companies lost share because they had balance sheet stress. They had to deal with the GST transition. A lot of that is now in the bag.
Okay, so we're wrapping up with the show. One word answer. Diwali is not too far away. So 19,000 on the Nifty or 17,000?
Sonia, how does it matter what the index does? Stay put there, be a long-term investor. Equity is only for long-term investing, and the result will be good. I keep telling my folk, everybody is going to die, but dying poor is a sin. Die rich.
I mean, I like this version of it. There's a bit of a philosopher in him, right? I mean, I like it. It's
morbid philosophy.
Not morbid. I mean,
Ridham, the problem in Ridham in India long term is 3 days.
No, that's not true. And sorry, I may be extending this show for a while, but somebody was challenging me about domestic flows, saying that this balloon will get punctured. And I said, listen, India has 150 years of equity investing culture. And those who don't have memory, in 1992, just before the Harshad Mehta, bull market ended, 25% of household savings were going into equity.
Wow.
Just to give you the context in today's terms, $700 billion is household saving. 25% of that is almost $200 billion. We are nowhere there. We're still scratching the surface. So.
I told you Ridham was in a good mood today, right?
Yes.
Okay, on that very optimistic note, Ridham, thanks a lot for joining in. And you folks have a great weekend. Thanks for watching Editor's Roundtable.